Just let me record this so that we can get there. And here it says, unlike, for example, stock market, okay, it has no centralized exchange and transactions are performed over the counter. That is, participants trade with one another through a worldwide network of banks, brokers, and other financial institutions. So it is telling us like, unlike what crypto, okay, unlike crypto, we trade nationwide. That means we are trading with one another. Your actions is counter with another action. What do we say? That whenever you want to exit a market, you are actually selling your profit to another to a counter. Okay, so what I mean by this, like for example, you're on an Euro USD buy, and maybe to an extent you want to exit the market. Okay, and now you set a TP. Now what does it mean? Your TP is what? A buy stop. Okay, now what does it trigger? It triggers other clients are available at the moment to buy that particular pair at that particular point in time. Okay, so it is vice versa. Whenever you exit the market, you sell what? Your profit and take the gains. All right, that's just how it is. Just like when you've been holding a dollar for like 2 months and it reaches to a particular point in time where you want to release it and say, okay, now I have made so much amount. I'm okay with the profit I have made. It's time for me to take my profit. What happens? You take that particular dollar that you have bought with your naira back to what? Aboki, to say, okay, now take this dollar, give me the equivalent rate what? In naira. So that's just what happens. And it's called over what? The counter. There are people already available to buy your orders. Okay, there are people around already to buy what your other institution and banks are already available to buy what your order, your sell stop, your buy stop, and others, which is likely referred as TPs. And the second part, it says it is one of the most actively traded markets in the world with an average daily trading volume of 5 trillion dollars. So when we say active, it means you and I can understand that this market is what? Very, very what? Volatile, which means it is not scanty. You understand? It is not scanty. Every business day, it is what? Very much overpopulated with what? Traders. Mr. Mike, I'm so sorry for that. There was a glitch and network kicked us out. And here we have, as a global market, forex is open 24 hours a day. So globally, forex market is there for you 24 hours a day. Okay, it operates as the bank operates. It only shuts down during the weekends, just like banks shut down during what? The weekends. The major financial centers are based. I hope you can see my screen, Mr. Michael. Can you see my
Yeah, I
screen?
can see it. Yes.
All right. Now it says the major financial centers are based across almost every time zone. In London, New York, Tokyo, Zurich, Frankfurt, Hong Kong, Singapore, Paris, Sydney, depending on the exchange active during a specific time. One can distinguish between three trading sessions: Asian, European, and what? American. All right, this is telling us about the time zones which we have in the forex market. And if you're familiar with forex market, you can know this particular aspect I'm talking about, which we have as the Asian, London, and what? The New York zones. All right. And also the Frankfurt comes before the New York. All right. The opening of New York is also the Frankfurt zone. So now these zones are likely when these banks open. Okay, distinguishing what? Time. Now, normally, London station opens during 8 a.m. in the morning, all right, and New York opens from shift of 12 to 1 p.m. in the afternoon, and the Asian takes over during shift of I think in the evening time. Okay. Now, depending on the type of the pay you're trading, we distinguish when you will be actually active in this forex market. If you're a trader of major pairs, that means you will likely be active during what? The New York session, which is the big boys section. And this particular moment, the market is what likely most volatile because there will be operations, orders, and or other stuffs going on. Okay, because that's the big boys time. All right, that's what the big boys time because America has the largest institution in the forex market. After America, you have what? The London, the Europeans, which is the London section. Asian section doesn't have much like that, which means, and that's why market always gets sloppy during the evening time. You get market ranging and other stuffs like that. So these are the things you need to understand as a beginner or why you're coming into the forest aspect. Now let's take a look at the next slide. All right, here it says who trades the market. So here you get a particular insight and overall perspective of those who trade what the financial market. So some people actually think like it's some kind of what should I say, for example, Elon Musk, and of course Elon Musk may also be a trader, or Jeff Bezos and all those kind of rich billionaires and all those stuff. Well, I have to tell you that the banks also make what trade what the forex market. Here we go through what the major types of institutions. If you can see my screen, and here you can see the types of traders, all right, in the financial space. In the first place, we have Eco Bank. In the second, we have Keystone Bank Limited, Polaris Bank Limited, Guaranty Trusted Bank, JP Morgan Chase. Now, this is just what example. And when we talk about banks, what do we explain? What do we mean? Banks trade what? The financial market. Because don't forget, in the introduction, it says you're trading what? A currency. That means you're exchanging currencies. Now, if you can think well, you hear some certain times where you come across some news that says something like, okay, Nigeria lost so amount in foreign exchange market. What do you think that was? This particular amount was lost in what? In foreign exchange. Every country has the banks trading what? The financial exchange. If Nigeria doesn't trade financial exchange, you won't have a dollar available in your country. If Nigeria doesn't participate in forex market, there won't be Aboki selling what? Dollars. In fact, there won't be dollars available in Nigeria. So forex is varied, it's versatile. Almost every country does that. And how do they do that? The bank does this for them. Okay. So when we talk about forex, it's just not you and I. Banks also operate what? In forex. They trade the forex. They use you and I, our money, to trade what? The forex. And that's why they keep telling you, come and deposit, come and deposit. What are you depositing? Your money is being used to what? To trade the financial market, either in stocks or what? Currencies. Okay? And also we have the central banks, European Central Bank of Nigeria, Bank of England, Bank of Canada. And we have investment managers funds, hedge funds, multinational corporation, and individual investors. So right now we are only looking at what this aspect of trader. We want to understand who these people are, and here we are getting the motive that these people are also what the banks. Let me tell you something. I personally don't store my money in bank because if you look at what is going on recently in the bank sector, you find out that your savings is no more savings. All right. Normally, a savings is supposed to be giving you interest in your account. Okay. When savings is savings, you will be having interest in your account. Let's say you deposited 1,000 and you leave it. before the month ends, you have something like 1,050 naira or maybe 1,500. And that is what. But what happened these days? Now, these days, when you deposit your money into the bank, instead you get what? Debited. Now, you'll be having charges for what? Maintenance of ATM. You having charges of maintenance for electronic, whatever they call it, and also so forth and so on. How does it benefit you? They are using your money to trade the what? The forex market. Your money is being used to trade what? The financial market. And you're being given what? The interest or the profit they make what? On top. Now, some of these institutions has people trading for them. And that is one the beautiful thing about what being a forex trader. The branches is unlimited. You can become a trader for some institution depending on how good you become in this forex aspect. You can become a trader for many corporations, just like you see here in the investment managers and hedge funds, multinational corporation, and individual investors. As a forex trader, you are watch that you have the opportunity to manage people's account. So far, you're good in what you're doing. You have the knowledge, you can make profits, and your loss will be what? Optimized. So you have this leverage, this opportunity to make money for individuals to get employed by multinational corporations, which needs people with experience of trading the financial world market. Hedge funds are also there searching for what? Good traders, investment managers. So the opportunities are what? Endless, is limitless. Alright, that's why forex trading is such a fun occupation to what? To have. Now let's take a further view into this introduction. And the next is the type of what should I say, the cycle of what we just read. Here you can see retail traders, market makers, investment funds, major banks, commercial banks, etc. and etc. They all interlink. If you can notice something, they all what? Interlink. No one is exempted. Okay? If you can see my screen, you will notice that these are all interlinked, from central bank to major banks to commercial company to retail traders. These are all what? Interlinked. But it's just giving you the whole perspective of what the types of traders are there in the market so that you know where you can fit in. So let me take example now. You and I, we can be referred as the what? The retail traders. All right, because we don't have much money. You and I can come into the market with $10, $100, $50. All right, or maybe let's assuming $1,000 at most. So we are still what? Retail trader. When we talk about major bank, these guys trade the financial market with large funds. This guy can come into the market with something like $1 million, $500,000, okay, $100,000. And when this comes into the market, you understand that the market makes what? A move. You know that a huge fund has come into the market. So these are what we call the big boys. And also they control what? The market. That's why you see it right here. It's called what? The market maker. They are the big boys, financial institution, hedge funds. These are the big boys, the central banks, right? They can alter the direction of the market. Okay. In fact, they are in control of what? The market, because they have the fund push the market to a particular direction in a particular moment in time. Okay. They have what? The funds. When we talk about fund, it's not $100, it's not $1,000. We are talking about millions of dollars that will come into the market, and you see the market react positively to that what? Direction. That's why sometimes when you go into the market, you see some institutional candles. That's what we call it. I know that yes, big boys are in control now. They have jumped into the market. And whenever institutional candle prints in the market, we understand one thing, that this market has what? A particular direction in that period of time. So these are the people that trade the market: hedge funds, corporate institutions, investors, and what? The central banks. Major banks also trade the market. So when someone asks you about who trades the market, don't get it confused. We are just the retail trader. We are just at the last ladder in the financial institution. We are the last. And what do? We only copy the footstep of this big boy, because you can't actually compete with them. If you want to compete with them, you will actually make what? Go home crying at the end of the day. So we be smart. We trade smartly, and we copy their what? Their movement. We try to find out the areas, the points, and particular moments in time when they will actually do what? Make a move, and we jump in and follow their what? Their movement, and copy it. So which is likely referred as SMC, if you already know about that, which will also be covered in this online Zoom, but not today, but apparently. Okay, so the next slide here, we will be looking at what? The currency aspect of this financial. What are these currencies? Okay, you may be asking, what is this currency? This currency is not less than what? The currency which you and I knows about. The world currency. Different currencies: United States dollars, euro, Great Britain pounds, Japanese yen. You can name it. It's what? Part of forex markets. All right, because forex is just a digital aspect of bank. So somebody actually came to me one time, and he was like, please, Mr. David, this forex of a thing, is it like all this Ponzi scheme, or this kind of size that one particular time and moment it will close down? And I was shocked, but I figured out he is a novice, and I have to get him on the right path. So I tell him that forex will never shut down. All right. So if you're having that doubt, forex is never going to shut down. So far, money exchange is happening, and money is being used to buy goods, exchange things for one another. Forex will always be there for you. All right, because forex is just the digital part of what? Money exchange. That's just forex for you. It's just the digital part. We go online to trade it. All right, so forex is always there. Forex doesn't have a particular point in time where it will cease to exist, or terminate, or what should I say, shut down. No, no. Forex is always there for you. So in this topic, we'll be looking at what? The base currency and the put currency. All right, if you have any questions so far, you can actually chip it in while I handle it before we continue. I hope you have your pen and your book also by your side, jotting all these down, Mr. Michael. Hello, Mr. Michael, are you there? Hello, Mr. Michael. I want to make sure you're following up. Should I still continue, or there's some certain place you're lost? Would be a pleasure to guide you back on it. All right then, so I think I should just continue then. So now in currency, we have what we call the base currency and the put currency. Just like we mentioned in the first tab of this topic, this class, we understand that financial is what? Forex is a foreign exchange of two pairs. Just like I explained, it's like you taking your naira to Aboki to get dollars. That is the process of you exchanging your naira to what? To dollars, making it the process of two pairs. Okay, two pairs. So that's how it is. You're always trading a two pairs. You can either buy one over the other or you sell one over the other. Now, how does it sound? In these pairs, we have the base currency and we have the quote currency. So let's assume now, as I explained earlier, you're taking naira to buy what? Euro USD. Now, if I may ask, or in your mind now, which is the base, which is the quote currency? Okay. So now, naira is the base currency because that is the currency you want to buy what? The USD. Okay, so naira is the base currency and USD is the quote currency. So when we talk about base, we are talking about the first currency we see on the platform. And the base and the quote, sorry, and the quote currency is always the what? The second currency paired with the what? The first currency. Just like we have Euro USD, and we have GBP USD, we have odd USD, and so forth and what so on. Okay. Now the base currency is what? The euro, and the quote currency is what? The USD. Just like in this slide, we can see that the first listed currency of a currency pair is called what? The base currency. And while the second currency is called the quote currency. Currency pairs value of a, all right. So right here, it says what? The currency pairs compared the value of one currency to what? The another. The base currency or the first one versus the second or the quote currency. So now when you take your naira to a bookie to buy USD dollar, what are you actually doing? What is the action taken there? In the whole scenario, what is happening? You and I can know that the value is what is at stake here. In between the two currency, the only difference is what? The value. And that difference is where you are actually what should I say? Is where you're specifying on to either make your profit. Okay? Like I said, your naira, you had an information from a friend and you notice that the value of your naira is going to drop. And what happened? You went to buy what? USD dollar to save it. So that when USD dollar will rise, because as your naira is dropping, USD dollar will be rising. That's just one thing about currency pairs. One should drop, one will be dropping, and the other will be what? Will be earning or gaining value on top of it. And what happened? As you got the insight that your naira will be dropping, while USD dollars will be gaining value on top your currency, and you went to a bookie ahead of time to exchange your naira to what? Dollars. What did you do? You just performed and what? A foreign exchange, but much more physically. And what happens? Let's say you bought that dollars and you hold it for like 1 month or 2 months. And let's say you bought the dollar at when your currency, which is the base currency, your naira currency was at let's say a dollar was 1,001 or 1,000 naira per a dollar. And you noticed, or from a information, you noticed that in future to come, a dollar will be 2,000 naira to naira. And what happened? Naira has lost what? Value to dollar. And you went ahead of time to purchase that dollar because you know that this dollar by that time will be much valued. You're just what? Conducting a foreign exchange. And when you buy this pair, your quote currency is USD dollar. You take it home, kept it in your safe, and when that 2 months reached, you find out that now a dollar is 2,000 naira per a dollar. What happened? You just made times two of what? Your money, because the base currency lost what? Value, and the quote currency gained in value. Now, when you go back to Aboki to sell that dollars, what will happen? You find out that you end up having what? Profit on the amount you used in purchasing what? That dollar when you did that. So that's how this forex market aspect what works. It's an foreign exchange, but mostly you need two pairs to conduct these what transactions. You need two pairs to conduct the transactions. So let's take at the next slide. Exchange rate. Okay. In finance, an exchange rate is the rate at which one currency will be exchanged for another. It's also regarded as the value of one country's currency in relation to what another currency. Just like I've explained to you, you can find out that you notice that the rate or the value, which can also be replaced with as the value, will be dropping. Your country currency will be dropping as from then to a particular point in time, and you want to leverage on that to make money. What happened? You went ahead to buy what? The quote what? Currency that will be gaining what? In value. By so doing, you have made what? Money. When you will sell back that quote currency, you have made what? You have made a lot of profit. So let's continue. When we believe that one currency will be raised against another currency, we buy the strong currency and we sell the weak currency. Just like I've explained, when you noticed, or maybe you got the information from a site or a friend or a platform, what happens? You buy the what? The strong currency, right? And you sell what? The weak currency. You do what? Sell the weak currency. Just like I've explained, Nigeria, you notice that your country's is going to be weak. It's going to be weak. Please mute your mic, Mr. Michael. It's going to be weak. You have to what? Sell it. You have to exchange it with dollars. When you exchange it with dollars, what did you do? You gave a booking naira and you collected dollars. You sold your currency and you bought what? A foreign currency. That's just it. It's what? It's some kind of a trade by barter, but in a more advanced way and digital way. Okay? So forex is more like a trade by barter, but in an advanced and more profitable way. So let's take another reason why exchange rate moves so fast may result to multi-billion naira companies that need to convert large amount of money into another currency. Now, when we talk about this, we are talking about something that drives the financial market. All right. Just for an instance, CBN may wake up tomorrow and realize that some companies or some large entities in the country need to convert what their currency into what foreign exchange, and they will liaise with them. And when they do this, you will find out what that your country currency will become what weaker. Your country currency will do what become weaker, or some certain things may trigger your country currency to what to become weaker, either news or pandemic or economic crisis and all those stuff. So these things attributes to what to financial market and exchanges. So let's take some example, even though we are running out of time, but we still rejoin this Zoom to continue. This simply means how much the quote currency will worth to the base currency. So here we have some examples. Euro GBP equals to 0.84. So here we will replace this currency with Nigerian Naira and what? USD, United States dollars. And it says that Euro GBP is equals to what? 0.8. Nigerian Naira to USD dollar is what? 84 cents. Let's say that if you get $1, you will get 84 what coins, or what should I say? 84 naira, which is like in cents. All right. And 1 euro worth 84 pence USD or Canadian equals to 133. That means 1 USD worth to what? 133 Canadian dollars. So what is this saying? It's saying that your currency, which is the naira, which is the base, is equals to 84 cents. And when you convert it, it will give you, when you convert it to United States dollar, it will give you 1 naira 33 what cents, showing you that the code currency is more agile, or should I say is more volatile than what the base currency. Okay, so this is telling you how the difference between code and base currencies actually works. Okay, this is how it is. Let's take the next slide. Fundamental and what technical analysis. So here we are looking at what drives the market, economic data, social and political forces that may affect currency prices. The idea behind this type of analysis is that if a country's current or future economy is good, its currency should what strengthen. The better shape a country's economy is, the more foreign business and investors will invest in that country. This results in the need to purchase that country's currency to obtain those what assets. Okay, so it's very simple, just like you and I know. Everyone loves having the United States dollar. Why? Because their economic is stable. All right. Now, if you and I can bet, unlike Nigeria, there has not been an increase in prices in stock and other provisions for the past, what should I say? This is for the past 2 years. But Nigeria is having increase in stock, commodities almost every day. You wake up today, you find out that what you bought yesterday is not the same price. It's not the same price today. So now this is not a good idea for foreign investors to invest in our money, because they understand that they may wake up tomorrow and find out that they have lost their money. Instead of making profit, they will lose, because our money is getting weaker and weaker and weaker along the way. All right. So what does this fundamental actually mean? It means that the economy at the whole plays a large role in how the currency gets strengthened or becomes weaker. Okay. Just like we have an EFP, when the market does a large volume of amount in a single minute or some minutes, and we have some fundamentals like CPI, some fundamentals like ISM, some fundamentals like core PPI. All these fundamentals actually and always affect the current market analysis during that period of time. What happens? Because whenever the government official releases a news, it affects the market. Imagine Nigeria saying now that we are able to refine our oil. What will happen? You find out that oil and Nigerian fuel become what? More cheaper. I don't know if you get the point. You find out that some prices about oil resources we bought will decrease, just like fuel is very much costly here in Nigeria. You find out that fuel will become what? Much cheaper. So all these news release events actually affect what? The currency. And when fuel becomes more cheaper, what do you think? The currency is what? Gaining strength. Because as it is right now, Nigerian currency is what? Dying. The currency is what? Dying. Just like you and I can understand, a dollar is about 1,006 or 1,005. That's not how it is in South Africa. That's not how it is in even Ghana. That's not how it is in Ghana. But why is it in Nigeria that a dollar is about 1,005 and rising? And as it is rising, you can understand that the cost of living is also what increasing and making things more unbearable because your currency is getting weaker and what and weaker. So fundamental analysis lies on the economic part, the industrial aspect, the employment aspect, the resources aspect of the country, and overall management of that currency what resources. That's where you get what your fundamental analysis. So whenever a country releases the news about the economy, it always affects the currency pair. It always affects the currency pair. And what happened? The pair that is paired with will actually or either gain value or lose value depending on what the news predicts. If the news adds value to the currency, the paired, which is the quote currency word, will lose value. But if the news reduces value from the currency, the quote currency will gain value over that party, over the base currency, over the base currency. So that's how fundamental analysis takes place, and that's all about fundamental analysis. It's actually predicting the value of two pairs from the economics chart what data. All right, from the origin of the currency, the economic or the country that owns that currency, the news, the releases, what is going on, is there war in that country? Just like Israel is having war now, their currency should be what? Fairly down because they are in need. A lot of things have been shut down, the oil, their resources, whatever exportation, or some refinance and some industries have been blown up with bomb and all those stuff.